central banks and nothing else. We can expect volatile global markets in the week. The Fed, ECB and 𝗵𝗍 have policy meeting and interest rate decision while earnings season continues. The labor market seems fine in the US, UK and even in the Eurozone, but central banks will have a difficulty avoiding recession while inflation is still high. Besides the central bank's meeting, we have to watch the NFP OPEC+ meeting and earnings reports. Let's review the most important events and news in the week ahead with me, Ahura, and IFCM Markets. Number 1, consumer confidence. CB Consumer Confidence is one of the best indexes to measure the state of labor market and how employees spend money. In December, the confidence was at 108.3, well above the 10-year average of 102. However, it has been losing momentum over the past year. In January, we expect consumer confidence to rise to 109, but recession fears can still slow it down, so missing estimates should not be a surprise. Number 2, Fed meeting. FOMC will finish its 2 days interest rate decisions and monetary policy meeting on Wednesday. The statements will be watched closely after the meeting and press conference 30 minutes later. Since the 25 basis point rate hike is widely expected, investors are mainly interested to know when tightening policies will end and what Mr. Powell will say about how long to keep interest rates high. However, considering recently published labor market data and acceptable consumer confidence and spending, we can expect a tighter stance in the statement and press conference after that. Expected decisions can be positive for the US dollar and hold overall pressures on the stock markets. Number 3, Bank of England. The success of European in controlling energy prices made us more optimistic in our predictions, but still, we expect a recession in the UK economy in the coming year. The consensus expectations is a 50 basis point rate hike by the BOE Monetary Policy Committee, but they will go by 25 basis points to avoid the severe recession. Similar to the Fed meeting, investors will be interested in the press conference after the meeting to learn when BOE possibly ends the tightening cycle. Expected policies will harm the sterling and will support the UK stock markets. Number 4, European Central Bank. ECB was one of the major central banks that started the contractionary policy cycle later than others. Therefore, we expect that they will slow down tightening policies also later. This week, we see a 50 basis point rate hike in our estimates, with President Lockhart mentioning that future decisions will be data dependent. These expected policies will hold pressures on the EU stock markets but will help the euro against its crosses. Number 5, NFP. Before Friday's non-farm payroll numbers, we expect to see the job openings still rolling over with 10.2 million unfilled vacancies by the end of December. Also, quits and layoffs announcements are on the rise. These data from the labor market do not match with other sectors. However, the numbers of jobs added has decreased each month since August, and we expect 185,000 new jobs for December. Estimates are so low, so beating estimates is possible. And if so, it will help the US dollar to gain and hold its strength. And finally, number 6, earnings of the week. Fourth quarter earnings season is in its entire run, and according to the Refinitiv, 65% of S&P 500 leads has beaten estimates, just a hair below the 66% long-run average. On Tuesday, ExxonMobil, UPS, Pfizer, McDonald's, Caterpillar, and AMD will report. Wednesday focus will be on Meta Platforms and Alibaba. Thursday will be the busiest day for the earnings of this week, with Apple, Alphabet, Amazon, Eli Lilly, Shell, Qualcomm, Honeywell, Starbucks, and Sony reports. Thanks for watching this video. I hope it's going to be an amazing week for all of you guys.